Nigeria's economic reforms have attracted over $8 billion in new energy sector investments, signaling renewed global confidence. Yet, critical questions remain about how these inflows will impact inclusive growth, job creation, and industrial expansion. Analysts are actually asking whether the reforms can sustain naira stability, control inflation, and mitigate risks to macroeconomic recovery. With foreign reserves now at $43 billion, concerns persist over the balance between real inflows and debt. As Nigeria resumes the G24 chairmanship, experts also examine how this position can influence global policy engagement and which sectors beyond energy are actually poised to benefit most. This morning, we're joined by Desmond Agboifo, seasoned energy and economist. Of course, he's also a director at Desyton Energy. And of course, we have Bolarinwa, Durojaiye, who's an oil and gas technologist. Gentlemen, thank you so much for joining us on the show. I'll start with Desmond. $8 billion in terms of investment inflow into Nigeria's energy sector. Beyond words, does it sound realistic to you, judging by antecedents?
All right. Thank you very much, Lekon. I think the key question will be around the significance of the $8 billion investment flow into the Nigerian energy sector. Clearly, that shows a demonstrable improved security in our growing investment structure in Nigeria. Now, the success of President Tinubu's reforms, according to the central bank governor, Mr. Olayemi Cardoso, has also made mention that this is key at this point in time. I mean, we've seen that projects of this nature needs a lot of investment in Nigeria, and again, this is good news for Nigeria to support critical infrastructure and enhancing our energy development and production goals. And I'm sure, I mean, from the news we've seen so far, Nigerian production is growing, of course, steadily, but surely we've seen the growth in just about almost 20% of previous production rates per day. So this investment will bring a lot of supportive plans to drive our investment in future forward. I really hope that this will be used to drive infrastructure and private sectors looking to boost national development and enhance national growth and policy plans in the country. Thank you.
Okay, so let me ask Bolarinwa, how do you see this $8 billion investment inflow? And for you, what would you say makes Nigeria's energy sector that attractive?
Thanks. It's definitely a positive look. And you asked an initial question about, is this real? It's as real as it gets. The international operating companies that made these final investment decisions, you can imagine that this did not come flippantly. A lot of considerations have been made regarding the investment landscape in Nigeria on the medium and to the long term. $8 billion is a lot of money, and it will not be, the outlook is not a one-year outlook or even a 5-year outlook. These are huge projects in deep offshore, and the multiplier effects of the successful execution of these projects. You can see that one of them is a gas project, which invariably will be feeding the LNG Train 7. So you see how that integrated look gives you a very positive outlook in terms of eventual outcomes of the energy industry. Also, interesting to note, you look at Nigeria as a very energy dependent country in terms of our export earnings. And structurally, the conversations have been ongoing for a long time about how we need to diversify our exports away, from energy. But on the other hand, we see from these kinds of developments that we have not even started in terms of the gains we can make from energy in Nigeria. It's often been said that Nigeria is actually a gas-rich country with a bit of oil. And our reserves and the potential it represents in terms of revenue earnings, specifically export earnings, and eventual development of the economy cannot be understated. So altogether, it's a very exciting time, and I think that the best is ahead.
Okay, so Bolarinwa says it's an exciting time. Desmond, the CBN governor during a recent engagement said that economic fundamentals are strengthening. Now, when you look at the structural reforms and the different, economic measures of government, would you say that Nigeria is actually tilting towards a macroeconomic stability now when you consider all the indices, including the investment inflows into the energy sector?
Well, thank you very much. Generally, my impression is more positive than negative because I know we are just on a very steady path. But generally, I'd say the Nigerian current trajectory of macroeconomic stability is being threatened by several risks. We can't overrule that fact. Firstly, we have issues around external risk that sort of comes on the macro scale. We've seen the global economic slowdown. We've seen kind of reduced demand for Nigerian oil exports and the country's impact on foreign exchange earnings. We've seen oil price volatility recently, and of course, there's a lot of buzzword now these days of net zero emissions and countries trying to reduce, impacts of fossil fuel consumptions. We've seen trade tensions here and there. We've seen geopolitical risk. We've seen just the twist of foreign investors coming to sell off assets. And of course, that comes with a lot of big advantages. We've seen, companies in Nigeria now trying to step to the game of being just local players to becoming much more visible operators driving assets forward. And you see, those are very key indications for the countries to grow and also mature as we see things move on. On the flip side of that, we've seen debt service risk. We've seen that the country has a rising debt service costs, which could impact development spending and undermine fiscal sustainability. But all in all, what is key for us is to understand that there is a policy and monetary policy coordination right now. Even if you see there's a bit of some kind of gaps in coordination between fiscal and monetary authorities. We just saw recently just passed the new tax act, which should be able to strengthen our fiscal discipline in the country and also ensure that some of these issues are addressed so that we can have a much more structured regulatory framework. So I think we are in a path to economic recovery, I'd say. However, we have some risks that we have to bear with. Thank you.
Okay, so Bolarinwa, you just listened to Desmond now. It touched on a few issues, risks, so to speak, or we can just call them challenges. But for you, from what angle would you come in from looking at the biggest risks that might even derail Nigeria's current trajectory of macroeconomic stability?
Thanks. Academics, when they refer to the economy, you often hear them say the political economy. So I would say, and it's easy to understate it, essentially political risk of the political economy. And this leads to another part of the conversation, of course. So we have the macroeconomic indicators, all looking good, moving in the right direction. But at the same time, we still have a lot of poverty and suffering on the ground. I think that an understated risk with our trajectory, our positive trajectory right now, is we need to catch up with translating these gains and this positive direction to some comfort on the ground. We need to start to become a bit more targeted in interventions. There is the wrong understanding that these economic gains in some kind of magical way will trickle down eventually, and it's true to some extent. But you have to specifically target poverty in many cases. You have to actually create safety nets. You have to fix human capital development at the grassroots level. Otherwise, civil unrest, there was some kind of protest plan yesterday, if I'm correct. You don't want those kinds of things springing up in all parts of the country and changing the landscape in terms of uncertainty and the future. So I would emphasize on that, apart from the other risks in the country.
All right. Now, Desmond, let's look at these $8 billion investments into Nigeria's energy sector. Now, of course, you mentioned the significance, but then we want to look at the impact it would have, most especially the projects now, the impact it would have on Nigeria's business ecosystem, and what the expected benefits are directly, of course, in the sector, and how it will affect other adjoining sectors too.
Okay, thank you very much. So generally, whenever we hear the news of investment coming to the country, it sparks a lot of interest. It sparks interest around stabilizing our policy environment. It sparks interest around investment in key infrastructure, and it also sparks an interest for possible diversification of earnings. The interest around the investment of this scale brings a lot of benefits. But time will fail me to mention the whole long list, but I just mentioned a few. One of which is we have lots of monetary benefits. We see a currency now being strengthened of some sorts, gives some level of comfort to the naira versus the trading dollar in the marketplace. We see lots of value in terms of our investment, trying to have a potential earnings for investors coming to have a return. And if you take that forward, it brings about a lot of benefits for the government to ensure that they have fiscally strong balance sheets, to ensure that the companies who operate in the space will bring in a lot of tax benefit, tax issues around payments on royalties and taxes, corporate income taxes. Those are some of the benefits that are very visible. If you take it even further down, we can now see a lot of involvement in the sector. And there'll be a lot of social confidence that is pushed across for people to now get into the business. Too long a time, Nigeria has suffered impressions of not doing well in terms of investment. And I'm sure with the ease of doing business reports we've seen, it's sure that Nigeria needs to do well and do more. So these investments will bring a lot more renewed confidence for parties who are looking to try in the energy space. I'll give a few examples. Where I see it as economists, very much involved in some of these landmark energy projects. And you imagine what a simple 20 million square foot of gas flare would do to our power sector. And if you ask me what's the typical type of costs that can drive a simple gas flare, something between $6, $7, $8 million.
Okay. And
pay out less than 3-4 years. So again, as small as the scale of this kind of investment, if you can multiply that factor in a couple of other sectors in the country, the benefits is going to be huge, both from the economic point forward and from the social standpoint.
Okay, well, the benefits would be huge. Bolarinwa, yes, we understand that. But then how can Nigeria now ensure that these benefits, most especially when we look at it from the angle of the economic reforms, will translate into inclusive growth?
Thanks, and indeed, that was what I was alluding to in my comments just now. It has to be intentional. We need to scale social safety nets. We need to target interventions. We cannot afford to just, assume, that these benefits and these gains will trickle down. Eventually, everybody will be okay. No, we need to fix some problems right now. Things like conditional cash transfers, leveraging technology and all of our identity frameworks, to push efficiency in getting these interventions across to the poorest and most vulnerable parts of society. It's very, very important. In the midterm, we then not really to start looking at one of the gains of this type of huge bets in the Nigerian energy landscape is skills transfer, technology transfer, skills transfer, jobs will be created. The local content law and regulations, will ensure that somehow a lot of all of these contracts and execution will happen locally. And that will translate into getting our young people upskilled, getting them involved in the value creation exercise that's going on. So it's a little bit of everything. To reiterate, you need to be very targeted and very intentional about fixing things at the bottom of the pyramid. And then while also building capacity, building opportunities for people to be economically active and productive and plug in, to all of this activity that's going on with these projects. Those are my views.
Of course. Yes, we understand that Nigeria actually just gained a chair in the G24 group, and one would expect that it is intentional when it comes to have some sort of influence, not only locally now, but on the global stage when you look at the big energy market. Thank you so much, Desmond Agboifo, a seasoned energy economist and director at Desyton Energy, and of course, Bolarinwa, Durojaiye, an oil and gas technologist. Thank you so much, gentlemen, for sharing your thoughts with us on the show.